Welcome to the YFP Real Estate Investing Podcast. I'm Nate Hedrick.
And I'm David Bright. We're both pharmacists and real estate investors that believe that real estate investing does not have to distract from a meaningful career in pharmacy.
Each episode, we share stories that educate and inspire pharmacists to leverage real estate investing as a part of your financial plan. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good, man. It's the end of the year. We have officially made it our final podcast of 2024.
Yeah, and it's been a wild year, this 2023. I know we had that prediction episode about a year ago, but it has been a wild ride.
Yeah, I mean, it's good. It's a good year, right? A lot of celebrating at this point, a lot of reflecting back on what happened in 2024. I mean, we had a lot of stuff happen. This is my first year as a real estate professional, getting that status. Tried to buy a couple of houses, weren't able to, but found some other interesting projects to get into, and that we're going to take us into next year. So it's been a cool ride.
Yeah, we were able to fortunately find a few houses to buy in 2023, but really focused a lot of time and energy on selling some high equity rentals to try to make space and open up opportunity for what is to come. So I know in a lot of situations where value has gone up, there's a lot of investors that are kind of walking away from the market at this point and kind of waiting and ready to jump in when something comes about.
Yeah, it's been neat to talk to other pharmacists, other investors to see where they're at. Some people are still diving in with both feet, but it seems like a lot of people are at the point now where it's a little more strategic wait and watch, which is what most people have been saying that I've been talking to. But it every market is different, so it's nice to talk to people and hear from people around the country about what they're doing.
Yeah, because I just talked with someone in my market who said they were trying to buy like more than a dozen houses by the end of the year or something. So like, yeah, some people are all in, some people are hanging back. And I think a lot of these decisions are driven by a lot of some of these big picture trends that we've been observing in the market over the last year. Some investors believe in that just buy it and forget it strategy of real estate, and that they believe that is best. That certainly works for some. Others prefer to play chess a little bit with a little more buying and selling and strategy mixed into that. And I don't think that there's a right or wrong answer. I would argue that pharmacists are probably a little more hands-on, especially pharmacists that are going out of their way to listen to podcasts and dig into the topic are probably a little more hands-on. So, we're probably a little more tinkery than the average investor. So it might be a good time to kick around again some of these just big picture concepts that we saw in 2023, how that might apply to 2024, and then how that might drive real estate investing strategy as well.
Yeah, I think even more important, we need to wrap up our predictions from the beginning of the year, right? So if you guys follow us at all, if you've been listening to the show for a while, way back on episode 90, right at the beginning of the year, we did a prediction episode. We basically said, what do we think our wild guesses are for how the market's going to turn out by the end of 2023? And so it's fun to now see how right or wrong we were 12 months later and go back and see what the year looked like.
Yeah. And if you missed that episode, don't worry. We're probably not going to hang out on that too much because we weren't all that right if we reflect back. So, but we will dive in and we will talk about kind of those predictions, why our thoughts were in that space. And even kind of regardless of predictions coming true or whether this year's predictions may come true or not, I feel like the value is more in what are the general concepts that drive strategy, how those might play out in your local real estate market, and how you might be able to apply those and other concepts to drive strategy for your real estate investing in 2024. So with that, can we jump into the first topic that we talked about? I know we talked a year ago about how mortgage rates were the big story at the end of 2023. And I feel like that's still end of 2022. And I feel like that's really still a big story at the end of 2023 as we see some major shifts in mortgage rates. We went at the beginning of 2022 from 3 something to like 6 something by the end of the calendar year. And this year we went from that 6 something to really 7 something. I guess we're recording in middle of December right now. And so right now we're at the low 7s. And so who knows, as fast as mortgage rates have been moving, that could end up higher or lower by the actual end of the calendar year. But really, we went up a smidge across 2023, and that impacts things like value appreciation, transaction volume, people just feeling stuck in their homes if they have to sell a house with a 3 something mortgage to go buy a 7 something % mortgage rate house. And then even the uneven impacts of different price bands in different markets. So a lot of variables that go into mortgage rates that we'll unpack today.
Yeah, and you and I both made some predictions here at the beginning of the year. And at that time, we had said that by the end of 2023, you did not think that interest rates would be any lower than they were. Pretty safe bet. I like that. They were not going to be lower. And then I thought that rates would be closer to 6%. So just slightly lower than that. And so we didn't quite hit it, I guess, but I suppose you were on it, right? They weren't lower than they were before. So that's pretty good.
Yeah, I kind of hedged. I probably shouldn't get a whole lot of credit on that one, right? Because I just said they wouldn't go down.
The
So yeah, I didn't
$1
really
Bob
make a
approach,
precise
right? I like
prediction.
that.
Yes, yes, exactly. So, but with the right around 7% at the end of the year here, rates only went up a little bit, right?
Mhm.
So I think that it's at least a good sign that they didn't go wild. Like I had heard some predictions they may hit like 10 or 11 or something like that. I'm happy about that they only went up
Yeah.
a smidge, right?
Yeah, I think, like you said, many people were worried that they were going to go haywire, right? That they were just going to go up and up and up, and there was no stopping it. And again, they've still come down actually in the last month or so, which is great. So I think hopefully we're kind of seeing that start to plateau a little bit. But either way, that shift and that continued higher rate than I think people were used to as a real estate agent, I've just seen the transaction volume go down as a result of that. It's changed a lot of buying plans along the way.
Yeah, the transaction volume is a term that I think gets thrown out a lot. Could you unpack that a little bit for folks and what that means kind of on a practical basis in the market, the volume of transactions in real estate?
Yeah, and you'll hear a lot of terms thrown around in this space. Is like average days on market is thrown out a lot. The other one is home buying inventory is thrown out a lot, as if that
Mhm.
means something to anybody. But generally, what they're saying is, how many people are buying and selling homes right now, right? How many people are listing a house, and then are there people available to buy that? And you'll see different markers in different markets of what is normal and what is slow or fast or what have you. But the idea is simply, are a lot of people listing houses and are a lot of people buying those homes, meaning are they turning over quickly? Is the transactions, is the volume of that high or is it low? And again, we've seen very low transaction volume, meaning that not a lot of people are listing, and the ones that are being listed, the good ones are being bought out quickly, but the ones that are kind of stinkers are just sitting there because there's no reason to buy a place with a high interest rate that isn't also a deal, because it's not worth it like was.
Yeah, it seems like the motivations for someone to buy a house as an owner occupant might be like moving geography where they have to sell and they have to buy. But someone moving across town to go from a 3 bed to a 4 bed house or a 4 bed to a 3 bed house or just making kind of minor changes within a market seems like that's really dropped off quite a bit, knowing that people have these kind of dramatic differences in their existing mortgage rate versus where they would be if they buy. So even if they're making kind of a on par movement from a value standpoint, they're seeing that monthly payment go way, way up if they sell and buy. So I think it's incentivizing a lot of people to just stay put, maybe do a renovation or an addition or something on an existing house rather than make a big move across town.
Yeah, I've been throwing out a stat recently that kind of gives you some idea that if you had a $500,000 loan, so forget the price of the house for a second, but a $500,000 loan at 3%, you're basically paying $2,100 a month on that mortgage payment. Okay, so $500,000 loan at 3%, $2,100. That same $2,100 today at 7.75% gets you a $294,000 loan. So who is selling their house with a bunch of equity at $500,000 to buy a smaller house so they can have the exact same payment? It's not viable for a lot of people. It's not worth it.
Yeah, not a lot of incentive to downsize if your payment stays the same or even goes up, and not a lot
Right.
of incentive to make a smaller upscale improvement in a house because your payment could like double, right? Like it could
Yeah,
it could really have major impact. So
exactly.
I feel like that's going to be one of the stories then for 2024 because I keep hearing people like begging interest rates to go down and start to see something so that'll start to unlock some of that just kind of pent up demand in the market of people that may want to move but just know it's not a financial reality. So I think there's a lot of people hoping the rates will come down. I don't know where that's going to go. My personal gut is
Hmm.
that we're going to see rates come down just a little. I don't think
Okay.
we're going to hit 4% or 3% anytime soon. I think we're going to come down just a smidge in 2024, though I'm hesitant even to bet a lot of strategy on it because there's still so much uncertainty in the market, it seems.
Yeah, I'd like to double down on my 6% from last year, because that's kind of like you said. I think I'm playing the hope strategy. I
Yeah.
want it to be around there, and I
Yeah.
truly believe that over the long term, like 5 to 6% is sort of the market rate for where interest rates should be, right? I think it should be kind of near that S&P 500 return. I think that is where a healthy market ends up being. But knowing where we're at, everyone is sort of priced in this idea of, well, it's got to come down sometime, right? And when everyone's pricing that in, it tends to not change, right? It kind of stays stagnant because everyone's anticipating it. Every time it bumps down slightly, everyone reacts like, "Oh yeah, I knew this was coming," and then everybody wants to have it kind of keep going, and it won't. So I think we're going to be right around the same. I think we're going to be closer to 7.5, 7.25%, unfortunately.
Yeah. And I think that the reason why I think a lot of people hang on to this issue is because it impacts so many other pieces of real estate, whether that's rent rates or house prices is two really major ones. So I want to spend some time digging into those two concepts also. So whether
Yeah.
or not you agree or disagree with us, I think it's a big thing to watch in 2024 is where are mortgage rates going? And will that do something like, for instance, unlock some of this just pent up demand, increase
Mm.
transaction volume, start to see some healthy behavior in the mortgage space. So with that, then the second thing we want to talk about would be rent rates. So we talked about that last year as a key variable. We expect that most pharmacist investors that are getting into the space, probably as we talk with more and more pharmacists, we see not as many people on the house flipping side of things, although that certainly exists, but a lot of pharmacists that have a full-time pharmacy job are looking for something a little more passive, and that tends to be more rental real estate focused. So whether that's commercial, large multifamily, small multifamily, single family, vacation rentals, it's some sort of rental type environment. So if you are investing in rentals, then knowing if rents are going up or down is really helpful for your math of underwriting and deciding if a rental property is a good deal or not.
Yeah, and so we went back and looked at a couple of options to see, how do we track this rent rate over time? And NerdWallet actually put together a really nice market trend. We'll link that in the show notes. But throughout 2023, basically, there was limited movement. Some markets went up, some went down, which is kind of what we both said would happen in a sense. But yeah, it was not a very dramatic year either side of the coin.
Yeah. And again, I don't know if we can give ourselves a lot of credit here because I don't know if we necessarily hit the nail on the head of which markets might go up and down. At least there wasn't like dramatic movement. We didn't see like
Mhm.
25% rent drops in a lot of places, right? Or 25% rent increases in a lot of places. There was relative stability, and we thought that maybe some of the crazy high markets might just kind of stop, but there were some crazy high markets that just kept going, and
Yeah.
there were some lower markets that didn't necessarily catch up. So with exceptions to where we thought it might go, overall rent rates across the country were up just a little bit on the year.
Yeah. And I think we deserve a little credit on that one. I'm going to give us a point. I think maybe just one. Because we were close enough, right? I think
Yeah.
overarching that market trend was there, but I agree. If you look at some of the specific markets, we didn't quite nail the level of increases or level of decreases that we thought we would see. I just think it wasn't as dramatic year as maybe we had predicted. It was pretty flat. Again, even if you look at I was looking at Chicago as a broad metro area. There are drastically different parts of Chicago, right? And so saying Chicago doesn't really mean anything until you dive into those pieces, and even seeing Chicago total rent rates going up or down, it might be meaningless for you, especially if you're investing in this one small part that changed more than others, right? So it's hard to give these broad trends and make investment decisions based on them. You have to really be able to dial into your specific market anyway.
Yeah, I think some of the other changes that might impact local rent rates would be things about just employment in the area. One
Hmm.
of the big headlines that we saw across 2023 was, less and less work from home, people getting pulled back into the office at least some days of the week. And so if some of these migration trends are over, like for instance, we saw a lot of folks leaving high cost of living areas and migrating towards areas like Boise, where there
Hmm.
was lower cost of living until at least recently, right? And so some of these other areas, we may see those migration shifts start to either slow down or maybe even reverse to some extent, depending on some of these in office policies. So that might be something to continue to watch. So I feel like population movement would be a key variable to look at in 2024 if you're evaluating a local market, whether employers are coming into or leaving an area, kind of back to the fundamentals that we used to look at before the pandemic and before work from home was a super key issue. So one of the things I think we are going to see this continued differentiation in markets that is going to be just highly market dependent rate shifts in 2024. That'd be my
Mhm.
prediction. So I think it'll be super important to pay attention to local statistics, not just for a market area like Chicago, but certain areas and neighborhoods and blocks and development in those areas, and what are employers doing in those areas. I think it'll be extra important to lean on a good realtor in
Mm.
2024 that kind of understands those market trends within a local market, because I think that those decisions are going to have larger impacts on rent rates this year, and that could have a bigger impact on a portfolio and a decision to buy or sell a rental property.
You nailed something there. I'm obviously biased, right? Thinking that a realtor is important here, but I think a good realtor is super important because most of, and again, I say this as someone in the industry, most agents are going to tell you, oh, this is a great place to buy, or oh, this is a great time to sell it. Like
Mhm.
they're going to sell it, right? What you want is someone that has data that says, hey, look, the
Yeah.
trends of this area are X because of A, B, and C. And here's two articles that I can show you that are showing the development of that. Or I sit on the board at the local whatever, and now this is why I understand what's happening, right? That data and that level of involvement is what's going to be key. Not just some realtor telling you this is a great market because I saw that Amazon opened up a facility down the road. Like it needs to be, here's the data to support this, and we're seeing market trends go this direction because of X, Y, and Z. Like that's going to be absolutely key next year. And it arguably it's always important, but I think that's going to be extra important as time goes on.
Yeah, and speaking of data, then I think going into our third piece of house prices, right? I think we need to go
Mm.
back to the data. So CoreLogic put together a good article about U.S. home prices as we come into the end of the year here, and looking at how prices on a nationwide basis came up just a little, right? Kind of
Mhm.
in the neighborhood of overall inflation. So as we've talked about before, this is generally a good thing for real estate investors to see prices go up even just a little bit year over year, particularly because a lot of real estate investors jump into a property on a leveraged basis.
Mhm.
Right. You may put 25% down on a rental investment property. So let's just say for round numbers, you put $100,000 down on a or $400,000 property.
Mhm.
If that property increased by 5% over the year, so that $400,000 property went up by 5%, now it's $420,000. There's a $20,000 increase in value. Putting that a different way, you had a $100,000 down payment. The value went up by $20,000. That's kind of like a 20% increase on your initial cash invested, which is really not bad. That looks like a pretty good investment. That can be tempting in markets where we're seeing values go up.
Yeah, and conversely, right, not to be the negative, but you're right. If you saw a 5% decline in price, that could mean you lost 20,000 in value, right? So your equity went from
Right.
100,000 down to 80 if if you have to sell. But that's kind of the key, right? That leverage helps you out, and it only matters when you have to sell. Like you only realize that gain or loss when you get rid of the property. People ask me all the time like, "Oh, I'm worried that I'm going to buy this place and then if the market declines, then I'm going to lose money." And the question becomes, well, when are you planning on selling it? Because if the market declines, but you're not going to sell it, then you haven't lost anything, right? That equity is still there. It should come back over time, or, it only becomes a problem when you have to actually make that sale happen.
Yeah, and I think that I've heard from people that from any time over the last like almost 10 years, as the market started to come up out of the 2008 recession, some people saying like, well, it's got to go back down eventually, and being so nervous about losing value. And
Hmm.
you're right. If real estate can go up, it can go down, and you need to be absolutely prepared for that. And you need to be prepared that the leverage scenario, just like you said, if the value of the property drops by 5%, that could look like a much more significant drop because of the leverage. So it's important to know in case you have to sell.
Right.
But if you are willing to ride it out, then yeah, looking at the long term metrics, it's certainly, as we look at house prices over the last 100 years, we know that you give it long enough, it tends to come back up. Not a guarantee of future success, but it certainly helps to allay some of those concerns for real estate investors.
And I think that's why you and I always focus on multiple exit strategies and having that padding built in, right? So even if you do have a small decline in value, if you can hold that property and cash flow or get the tax benefits or just focus on netting zero and paying down the mortgage, like those can all be wins even in a bad market or a decline in value. It doesn't mean it's a bad investment necessarily just because the property is going down in value. Again, if you've got that long-term play in mind, it can still be worthwhile.
Yeah, particularly thinking through like cash flow, tax benefits, like all the
Right.
everything that goes into real estate, a little bit of decline in value, particularly if you're not planning to sell, you don't need to sell, that can be really strong. So I think thinking through things like a strong emergency fund and ways that you can insulate yourself from needing to sell in a bad situation and take that loss can
Hmm.
help you hold out until that property starts to recover. Um, I think too, one thing that we need to think about here is we know that if we look back just a few years ago, if we think about like 2021 or even end of 2020 when the market started to really go wild, if you would have bought in like June 2020 and sold in June of 2022 or 2023, that 2 or 3 year period, there's a whole lot of people that just bought a house, did nothing to it, sold it, and made a killing, right? Because the
Yeah.
market just supported them. I don't know that we're going to see a boost like that anytime soon. I know there are some people that are suggesting that if interest rates drop quite a bit, we might see some further increase. I'm like you. I feel like interest rates are kind of where this conversation begins. And
Yeah.
I'm not willing to bet that they go dramatically lower, causing a big market jump this year. I feel like my prediction is that rent rates and house prices are going to be relatively stable, save for some market level differences. But what about you?
No, I think you're spot on. I think it totally starts with the mortgage rate, and I think that if we think the mortgage rate's going to be pretty stable to flat, and even if there's a slight decline, like even if we lost half a percentage point right now, or even a full percentage point, I don't think there's going to be this huge influx in buyers that have just been waiting for that 0.5% drop. I don't see it happening. I don't see that being enough to move the needle when you're talking about people that are trying to sell their 3% interest rate loan. And so I don't think we're going to see this big swing in the market or anything like that, unfortunately. Again, especially if you've been somebody sitting on the sidelines waiting to buy, I don't anticipate us seeing this big correction of market drop that you can suddenly buy into. I don't see it happening.
Yeah, and as much as we like to share these predictions, I'm not really excited to share that we were both pretty off on this one. Also, like I think that we predicted different things than this like 5% increase that we saw nationwide. So, and
Hmm.
one of the things we talked about though last year in being really off, I think is still at least true that it's helpful to know that these predictions are just predictions, right? And
Yeah,
you can't really take these to the bank by any means. But one of the more valuable things is, can you stress test your investment? What would happen if the market did go down by 10%, by 15%? Like, would that make this investment look more catastrophic in some way? Am I going to, like you talked about how the value only really matters when you go to sell? I would say that's true. The minor exception to that is if you have a refinance built in your
sure.
strategy, right? So if you're going to buy in January 24 and you want to refinance in July of 2024, if the market you believe may drop by 10% and you're expecting a really high appraisal in July of 2024, you may want to have some caution there and stress test. Could I still make this deal work if values drop or if interest rates don't go the way I want them to? People that are banking on, well, hey, in a year, the value is going to be higher, interest rates are going to be lower. It'll be an easy refinance. It might suck as an investment today, but it'll be great in a year. Like those are the scenarios that make me a little nervous, especially as a risk averse pharmacist.
I completely agree. And I've heard multiple people talking that way, like, well, buy it now, it'll be fine because in 6 months rates have to be lower.
Yeah,
Anytime your investment strategy is, well, they have to do this, ugh, I get that nervous feeling, right? Because you don't know. We love to sit here and make these predictions because we're a podcast and it's fun. Like it's not part of our investment strategy to just
right.
bank on these things happening, right? It's completely a stress test. You have to be able to weather any outcome for it to make sense. And so I think that's a really good clarification that banking on that can be dangerous and people need to be hesitant to do so.
Yeah, and it's one thing to have that baked in your strategies, like this would be great if this worked out, but
Yes.
knowing that it doesn't have to. Like I know you've had a story before of a house that you bought where you were hoping for a refinance in order to get more cash out of it, but as rates went up, you were like, you know what? I think it just makes sense to leave some cash into the deal to make it cash flow. And it wasn't necessarily your first choice, right? But it
Yeah.
worked for you.
Yeah, and that was right at we bought that. It's funny, we got that house under contract in December of 21, I think it was. Yeah, December of 21. And so really right before everything started to take off. And so our 6-month refinance was like in the height of interest rates every week were
Yeah.
going up.
Yeah.
And literally every day that went by that rehab wasn't done made less and less sense to refinance. And that's something we didn't anticipate, but it was okay because we had multiple exit strategies. We said, look, we can just hold this. We can let the equity sit in the property. It slows us down on other plans, but it still makes it a good deal. I mean, it's been fine. Like that house is still one of our rentals today and haven't had to refinance it. The equity's still sitting in there and it'll be tappable someday when it makes sense.
Yeah, and tappable either when you refi or whether you sell it, but
Yeah.
right now you've got a really low mortgage payment on a rental, and that's not necessarily a bad thing from a cash flow standpoint. So
Hard to beat.
yeah, I think that one of the things going into 2024, I think that I'm at least taking home from this is focusing on reserves and
Mhm.
caution so that if I'm not able to refi out, it doesn't break me, right? Same kind of scenario that you're describing. So in our strategy, I want to make sure that there's some cushion there that if the market doesn't go the way that I'm predicting, I'm okay because I think we're in kind of an unpredictable state. But yeah, I'm still thinking that this is probably going to be a little more stable value year. Setting aside some market level changes. Is that kind of where you're at in your prediction for the year then?
Yeah, I think so. I think, like always, there's always properties you can buy, and there's always deals that can work. I think you just have to be more cautious about it than we were, 2 years ago. You can't bank on the fact that it's going to be an appreciation gain and you're going to have an interest rate that you can refinance out of. What if our prediction at the beginning of this episode is wrong and interest rates go to 8.5%, right? So
Yeah.
I think trying to, like I said, bank on any of those things happening is where you're going to get burned. So we're just cautiously working our way into 2024, keeping those reserves available so that when a good deal does come along, we can pounce on it. But we're not fighting for every single deal to make it work, right? If that makes sense.
Yeah, and I think that seems like a good strategy. And I'm hearing more and more people taking this kind of more just like route of caution, right?
Hmm.
Particularly in a risk averse group like a bunch of pharmacists. Caution could be a good thing. Wait for a good deal. Don't just assume that you can buy anything and this 20% year on year appreciation is going to make you look like a genius for buying any house out there, right? You have to put a
Hmm.
little more strategy into it than just buy something and hold it, right?
Yeah.
So, yeah, knowing that there's a little more complexity, what's your strategy, Nate, looking like for the next 12 months for your own personal real estate investing?
Yeah, so we're right now we're looking at trying to focus on some different deals, some things we've not done in the past. We really like the buy and hold single family here locally in Cleveland, Ohio, and we've been doing a little bit of restructuring to kind of make that a bit easier. So selling off some rentals that are out of state, trying to restructure to more local stuff here that I can manage myself. So that's been part of it. And then again, we're also looking at a large multifamily deal for the beginning of this year. I mean, I think that will be pretty different for us, but I think the spreading out some of that risk of the higher mortgage rate to a larger multifamily just makes a little bit more sense when we run the numbers. I told you at the beginning, we looked basically the entire year for the right deal, put offers on houses, and we're getting beat by people at offering way more than the numbers said made sense. And so I think just a little bit of frustration from this year from that, not being able to find the right properties is kind of driving us to look at other avenues where you can share that risk and spread it out a little bit more.
Yeah, and then you're leaning more still in the long-term rental rather than the short-term rental, or is short-term still on the horizon for you?
We're always sort of looking for that short term, but I think for right now, we're shifting toward that long term strategy. We really like that from an investment standpoint, that the long term buy and hold is still there. And so I think if we find the right short term rental place, we're
Mhm.
always in for it. It's just we've started looking a little bit less just because the interest rates make it so much more difficult than it was 2 years ago.
Yeah, yeah, no, that makes plenty of sense. I think we're kind of in a similar boat. Like I'm looking a lot more for the long term rentals too. I think flipping could still be viable, particularly if it's a
Mm.
shorter time horizon, so that there's not
Mhm.
as much risk. Like doing some sort of 12 or 18 month massive project feels a little risky in an environment that could kind of go in a lot of different directions. But flips, or sorry, rentals, I feel like is a good place to stay. And I know that one of the spaces that you and I have talked about is
Mm.
the price bands that we brought up earlier. You know, the kind of the middle market, kind of the median home value across the nation. It seems like a pretty sensitive area to shifts in interest rates. I've seen some argument that higher priced properties may be less sensitive, particularly if someone may be not necessarily a W-2 qualifier on that mortgage, or they may bring more cash to that picture. And then some of the lower price points may be a little less sensitive to it, where a half a point shift on $100,000 loan may not be super dramatic on a monthly basis. So I think one of the areas that we've talked about over the last few months that we should probably talk about here for a minute would be those price bands, and how you and I are both kind of gravitating towards more of the affordable housing area, right?
Yeah, I think a lot of this for me is driven by just the necessity, right? I think there's a huge housing problem out there right now, and people are trying to figure out how to solve it. And anytime there's a problem like that, I think there's people that can jump in and help out and find that good opportunity. And so I think for us, looking at that and saying, like, okay, this is clearly an issue. How can we step in and basically be available to combat that issue, and also, make it a good investment decision as well. So I think affordable housing is going to be huge. I think you're going to see a lot of people trying to find ways to convert things that aren't currently affordable housing into affordable housing. We have a huge project going on in Cleveland right now. Someone's buying up an old office building that's like right in the heart of downtown. I mean, the location is amazing, and converting it into like 150 small,
Mm-hmm.
single family housing units. And it looks like it's going to be incredible. So I think people that are creative like that are going to have a lot of success. And, if they do it the right way, it can be really advantageous for again, individuals that need that housing, and also the investors behind those individuals.
Yeah, I think along those lines, a couple things I'm seeing in my market are some increased flexibility in converting single families into small multifamilies, like
Mm.
either adding an additional dwelling unit, like converting maybe a larger detached garage into a unit, or converting a basement into a basement apartment or something like that. I'm seeing some of that, or another strategy that I know we've talked about before that I'm definitely looking to in 2024 is trying to find areas where there's a house that has a potential to unlock some value that may not be quite as visible. So
Mm.
maybe something like converting a 2 bedroom into a 3 bedroom house by finishing a basement, adding an egress window, or by taking a house with a family room and a living room, converting the family room into a primary bedroom and a half bath, or something like that, to try to increase the value, increase the utility of the house with some minor improvements. So areas like that to try to create some value also, I feel like, helps with some cushion against some market forces if they go the wrong way, and then also may help with some affordable housing options. If you can buy at a 2 bedroom house kind of price but make it into a 3 or 4 bedroom, it can make it more viable to rent that out at a more affordable rent rate.
Yeah, I think that's going to be huge. And I think, again, anyone that's able to find those creative solutions, that's where you're going to be making success, especially in 2024 and beyond. But that's really, I think, where the value is going to be found.
Yeah. No, I think it makes sense. And I think it makes some hunting and some strategy a little different in 2024, which, again, whether you agree with our predictions or not, that's more of where we wanted to get the juices flowing, is
Yeah.
what are some of the variables that might impact your local market, as far as home prices, as far as transaction volume, as far as what's in demand and what's not, what are the rental rates going to be? And so as you're evaluating your local rental market where you are doing your investing, then what should you be looking at? Who should you be talking with? And how can you make really good informed decisions for your local market in 2024?
Yeah, we would love for you guys to share that with us too, and the rest of the community. If you want to join us on the YFP Real Estate Investing Facebook page, that's an awesome place to touch base with the community and just talk with other like-minded investors like yourself. We've got a lot of new stuff cooking in 2024, so do stay tuned. If you've not checked part of our newsletter yet, you can access that on yfprealestateinvesting.com or yfprealestate.com, excuse me. That's a great way to sign up for our newsletter so you can stay in the know, especially if you're not on Facebook or something like that. But there's a lot coming, and there's a lot of fun stuff that's going to happen next year. So hopefully you guys can stay with us for that ride and keep learning and keep being a part of the community. So thank you guys so much for joining us this year, and looking forward to what the next year holds.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard in today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with us, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group.
As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content of this podcast is provided to you for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in this podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with their financial advisor with respect to any investment. Furthermore, the information contained in our archive newsletters, blog posts, and podcasts is not updated and therefore may not be accurate at the time you listen to it. Opinions and analyses expressed herein are solely those of your financial pharmacist unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer.
Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.